Top three things in my notebook this morning: Japan, number one; number two, Germany; and number three, the euro versus the dollar. In the aggregate, I'd say that it's all one big currency trade, just FYI. So to hit on Japan first, to get Japan right, what do you need to get right? To get Japan right, you need to get the yen right. To get the yen right, you got to get the dollar right. So the dollar is down this morning ahead of people expecting a no taper on the Wednesday Catalyst Day, which provided the yen an up move of like a whole 20 basis points. But just FYI, Japanese stocks do not like that. Japanese stocks down 1.6% overnight, and more importantly, broke our immediate-term trade line on the Nikkei of 15,232. Point number two would be Germany, which put up an excellent PMI number for December of 54.2 versus 52.7 last month. So again, growth accelerating in Europe as the currency strength becomes more pervasive. The DAX holds trendline support, which is a very good thing. We're not currently long of Germany via the EWG, but we will be if, again, we get our buy signal. But 88.76 is the trend line, was tested, tried, and did not break, with economic data supporting that. Finally, the euro. So the euro could be up for two different reasons. Number one, the dollar being down ahead of no taper being an expectation. I think the Fed, quote-unquote, economists, for people that follow them, dropped to 25% of people expecting a December taper. But the other thing could just be this great economic data that continues to be delivered in Europe. So European currency, much like the U.S. currency, is going up on accelerating economic data. And on top of that, the Fed is being the Fed. The Europeans do not have Janet Yellen and Ben Bernanke, which is a very good thing for the euro. So, again, pushing towards 138 would be our view on the European currency versus the dollar. And those are your top three things.